Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you back for another deep dive into the latest market action. Today we've got a packed lineup with record highs, tech-driven momentum, geopolitical tensions, and a huge earnings week ahead. So, grab your coffee and let's break down what's moving the markets for us long-term investors while also keeping an eye on the short-term vibes. Let's kick things off with the major indexes. The S&P 500 notched another record high today, inching up a modest 0.12%, showing that the bulls are still in control despite some choppiness. The Nasdaq outperformed with a 0.20% gain, fueled by tech strength, while the Dow Jones slipped slightly by 0.13%, reflecting a bit of caution among investors. What's interesting here is the split market behavior. Tech is leading, but not everything is rallying together, which signals we're at a grind near the top. For us long-term folks, this resilience is encouraging, but it's a reminder to stay diversified as volatility could creep in. On the winner's side, we've got some standout large-cap gainers driving the narrative. Intel surged nearly 5%, riding high on positive news about a new semiconductor segment that's got the market buzzing with potential. Advanced Micro Devices also impressed with a solid 3.5% jump, continuing its hot streak this month. These moves in the chip space are a big deal. AI and tech demand are clearly fueling growth, and for long-term investors, this sector remains a cornerstone to watch as innovation ramps up. But not everything was rosy today. Among the large-cap losers, Tesla took a hit, dropping over 5%, likely tied to ongoing concerns about delivery numbers and broader EV market pressures. GE Aerospace also saw a decline of nearly 4%, reflecting some profit-taking or sector-specific headwinds. For us focused on the long game, these dips can be opportunities, especially with a name like Tesla, but it's crucial to assess whether these are short-term blips or signs of deeper challenges. Looking at the market movers, Nvidia continues to dominate trading activity with a slight uptick, reinforcing its role as an AI powerhouse. Amazon and Tesla also saw heavy volume, though with mixed results, as investors position themselves ahead of big news. These names are the pulse of the market right now, and for long-term strategies, they're key holdings to monitor for both growth and risk, especially as short-term sentiment can swing fast. Diving into the most active stocks by volume, Nvidia again tops the list, showing just how much attention the AI narrative is grabbing. Intel also saw significant trading after its recent news, while names like Nike and Nokia popped up with notable activity, hinting at broader sector interest. High volume often signals where the action is, and for us, it's a cue to dig deeper into these stories for potential portfolio adjustments. Now let's talk about the big week ahead with earnings season heating up. We've got heavy hitters like Apple, Microsoft, Amazon, Alphabet, and Intel set to report, which will give us critical insights into tech and consumer trends. These reports could be make or break for market momentum, especially with expectations high for AI and cloud growth. For long-term investors, these aren't just quarterly numbers, they're windows into sustained growth stories. Keep an eye on how these giants address margin pressures and innovation pipelines, as that'll shape our confidence for the years ahead. In the meantime, recent reports like Verizon's upbeat results today show some sectors are holding strong despite challenges. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your investments. Shifting gears to broader market news, geopolitical tensions, particularly around U.S.-Iran relations and the Strait of Hormuz closure, are keeping oil prices elevated and adding a layer of uncertainty. This is pushing some investors to hedge, as seen with the VIX ticking up despite market highs. For us, long-term players, this is a reminder to balance risk. Energy stocks might see short-term boosts, but global disruptions could weigh on broader growth if they escalate. Meanwhile, the Fed's upcoming rate decision and potential leadership transition to Kevin Warsh are on everyone's radar. A shift to a stricter policy could cool off some of this rally, so staying nimble is key. Looking at the past week's top large-cap performers, Garmin led with a massive 21% gain, while Shopify and Occidental Petroleum also posted double-digit jumps. These short-term surges highlight pockets of strength in tech and energy, and for long-term investors, they're worth investigating to see if the momentum has staying power or if it's just a fleeting spike. On the flip side, Genuine Parts Company tanked over 20% in the last week, with Rivian and Blue Owl Capital also seeing significant declines. These drops can sting in the short term, but for us, they're potential entry points if the fundamentals remain solid, especially in innovative spaces like EVs or alternative investments. Sector-wise, industrials topped the charts with a 2.12% gain over the past week, followed by consumer cyclicals and energy showing strong upward moves. These sectors are riding broader economic tailwinds, and for long-term portfolios, they offer diversification away from tech-heavy exposure, especially energy with oil dynamics at play. On the weaker end, healthcare lagged with a 0.62% drop, alongside utilities and financials showing slight declines. These sectors might be feeling the pinch from rate uncertainty or specific industry challenges, but for us, they can still hold defensive value in a well-rounded strategy over the long haul. Wrapping up the market vibe, the S&P 500's rally echoes historic surges like 1982, but with inflation and geopolitical risks lingering, some analysts caution that this climb might not stretch as far. For long-term investors, this means staying committed to core holdings while being ready to pivot if macro conditions shift. Short-term, we could see pullbacks as markets are priced near perfection, so keep some dry powder handy for opportunities. Over on the Nasdaq, AI chip stocks like Qualcomm are powering records, but the rally isn't broad-based, which could mean volatility ahead. As long-term players, we love the tech growth story, but it's wise to temper enthusiasm with caution on overvaluation risks in the near term. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates, in-depth summaries, and exclusive SWOT analyses to keep your investment game sharp. Hit that like button, subscribe, and we'll see you tomorrow for more market insights. Stay invested, stay informed.